welcome to my channel, The Ninja Traders. If you're new, my name's Tina. In this channel, I go over investing, entrepreneurship, and trading. In today's video, I'm going to go over exactly what are stocks. So if you're interested in learning, keep watching. So to put it simply, stocks are pieces of a company that the company offers in order to raise money if they're trying to venture out and do research or grow their company. If you own a stock, you technically own a piece of the company. When people choose to buy stocks, the usual reason is because they're trying to increase their portfolio or save money or have some sort of passive income before they retire or while they retire. In some cases, stocks do pay out in dividends or the stock price appreciates. So if you buy and hold a stock and the price appreciates, you can choose to sell that stock later and possibly close out in a profit. On average, the stock market return is about 7 to 10%. Some companies, however, do a lot better, but other companies do a lot worse or don't profit at all. That's why this is an average, and that's also why it is best to invest in different companies. For example, with the S&P 500, which is a collection of the biggest 500 companies in the US, some of these companies reported a higher rate of return and other companies reported a lower rate of return. This is one of the reasons why it's great to not put your eggs in one basket and to have a variety and spread out your interests and spread out which stocks you decide to buy. Hit the like button to let me know that you also love investing in stocks. With dividends, if the company does well, you could see a dividend payout to you either annually or quarterly or even possibly monthly depending on the stock. With capital appreciation, this pretty much means that if the price of the stock increases, the value of the stock that you own also increases. If the price of the stock decreases, then the value of what you own also decreases. This is why you should always do your research and look up companies and see if you agree with their values and what they're doing and overall how well they've done throughout the years to make a decision if you want to invest and buy that stock. Let me know in the comments down below if you prefer to get paid in capital appreciation or in dividends. Dividends are also not guaranteed. A company can choose to pay out dividends or choose not to pay out dividends. This may change with what's going on in the world and the economy. If you have a crash in the stock market or an event that causes the market to not do as well as companies would hope, these companies may choose not to pay out dividends. But on the other hand, if the market is doing great and these companies are seeing profits, then they can decide to pay out dividends to you. So there are usually two types of stock, common stock and preferred stock. With common stock, you may get a vote in the shareholders meeting. With preferred stock, you might not have the ability to vote in these meetings. However, when it comes to recouping the shares of investment, common stock shareholders are at the end of debt holders, creditors, and the more important investors. Common stock shareholders typically can get a vote in these shareholder meetings. However, the company can decide not to pay out dividends. Preferred stock holders may not get a vote in these meetings, but they are more likely to get a dividend payout. If you didn't know this, stocks do have classes. It's usually designated with a letter of the alphabet, such as A, B, or C. For example, the stock Alphabet, who happens to own Google, has a Class A stock where you can get 1 vote per share that you own. Class B stock is held by the company's founder and usually gets about 10 votes per share that they own. Class B stocks aren't usually traded, they're used to help the owners or the founders retain ownership of that company. The Class C stock unfortunately has no voting rights. This is usually owned by employees or a common shareholder. So to sum up this video, stocks are the fractional ownerships of a company. The ways you can make money by owning a stock is either by dividend payouts or the capital appreciation. And in regards to risk and returns of stocks, generally the more risk that there is, the more or higher returns that you have. Thank you so much for watching until the end. I do appreciate it. I'll come out with more content. If you really liked this video and it was helpful to you, please hit the subscribe button and notification bell so YouTube can let others know that this was an amazing video. I'll see you guys in the next one.